Cool. Good afternoon, everyone. I am Dale Rodriguez. This is another LinkedIn Live. Thank you for joining me. Today, I have Glen Thomason of Glad Insurance and Finance joining me. Glenn, thank you for joining.
Thank you. Thanks for inviting me.
As you know, I've been doing these, and you said you've been watching them. So thank you first of all for watching. Yeah. That's great. And
they're really good.
As I explained in our pre-prep call, the idea is, look, we'll have a chat. I'll ask you some questions. I'll ask you some kind of newbie questions because I found that on LinkedIn, people are asking for content, and there have been debates on whether the content should be more business, more professional, more fun, blah, blah, blah. And I feel like if I can do these LinkedIn Lives and talk to professionals about their industry, it ticks both boxes. And also interesting people. So, for example, I can see you've got a guitar in your background.
Yeah.
How long have you been playing?
Well, I actually don't really play guitar, but it's my wife's guitar, and she plays guitar, and so that's hers. But I do play a bit of keyboard. It's out of shot, but I have got a little keyboard in the other room, and we play some songs together as well. So
I'm not gonna lie, it got me a little bit excited. I'm just gonna zoom us in a little bit so you can see to the left of me. Is that side? Yeah, that side. I've got a guitar just there.
Oh yeah.
And there's quite a few just behind me, and I also have one literally just to the left of me.
Oh wow!
Yeah, when I feel like jamming, so cool.
Yeah, nice. I think I've seen you do that before on the lives as well. So yeah, no, it's good.
Enough about me and my guitar fetish. Glad Insurance and Finance. I'm intrigued.
Yeah.
Why is it called Glad?
It's called Glad because when we set it up, it was myself, Glenn, and my business partner Adam, and Glenn and Ad pulled together Glad. But it lets us use little cheesy phrases which people will have seen. I can say glad to help, glad to be here. Just keep. And it's funny now because every time I type the word glad, and I don't mean that in an email, it then plays in your mind because it's it's the name of the company. So
fair enough. Yeah. That's cool. So some kind of marketing background there. Insurance and finance is an interesting kind of split. I don't think you usually see two businesses doing it at the same time. How did it come about?
Yeah, so my background's in insurance, and that's what I've done for the longer time. And I was working in an employed role up until 2020 when we launched Glad Finance. The idea was we looked at the sort of proposition on the finance side, and it's broken, which is the same word, insurance broken, finance broken. And looking at it, the sales process, the types of customers that we were dealing with, there was real synergy between the two in terms of the same type of customer, and the process very similar. You're going out, you're gathering information, you're then presenting that to, on the finance side, lenders, on the insurance side, insurers, and then they come back with their terms, and then you present those to the customer, and if they're acceptable, they proceed, and etc. And we found that actually with that synergy and with it being the same sort of customers, there was real sort of cross-sell opportunity that was being missed. Because I mean, as an example, on the finance side, if I had somebody that was purchasing a commercial, needed a commercial mortgage, say, they're purchasing a commercial premises, at the end of that process, once they've bought that building, they'll need to insure that building. And actually, a lot of the information that you need to do an insurance quote is just naturally gathered in preparing the finance quote. So to be able to, at the end of that process, say to somebody, oh, by the way, here's an insurance quote. This is how much it will cost you to insure the building, without actually having to, restart that whole process with them. Is really powerful. And on the other side, if I'm out talking to a manufacturing business or something like that, and they're, part of my insurance review is to discuss with them, what are your plans for the next 12 months? Will you be buying any equipment or machinery that will need to adjust the policy to ensure it caters for those items? Actually, as part of that conversation, if they say yes, oh yeah, well, we're buying a bit of machinery, it's £250,000 or something, we can turn and say, okay, well, how are you funding that? How are you financing that? And we can perhaps help them with that as well. So I think it's something that bringing those two things together creates opportunities, obviously from us from a business point of view, but also to be able to offer that wider kind of proposition to our customers.
Okay, so how steep was the learning curve from going from insurance to finance brokerage? Because I can imagine there's, like in every industry, there's acronyms, there's terminology, there's regulation as well. Is there anything in particular that surprised you when you kind of started adding the finance to your insurance background?
Yeah, I mean, I'll be honest. Yeah, the learning curve, it was steeper than I perhaps thought as we were going into it, which is probably for the best, really. But yeah, there was a lot to learn. It's a lot of numbers, a lot of I suppose really, I understood quite quickly, picked up what the products are, what the various products were, what they did. And what different scenarios they were used for, spanning from, we do everything from property development, finance, bridging finance, mortgages, but also like working capital solutions for businesses, so loans, asset finance, invoice finance, and that type of thing. And that bit, I think I picked up quite quickly. All of that, it all made a lot of sense. The bit that I think takes a little bit longer is learning the market, the player, the suppliers, the lenders out there, in terms of who they are, what they look for, and they're all very different. They're all got very different criteria, which is good because it meets everybody. There's something out there for everybody. But that information piece, that's the bit that on the insurance side I've got from years of experience. I know, this insurer has this product for this type of customer, and I know that off the back because I've learned that. So yeah, the learning curve, the steep learning curve, I think really is it's understanding who all the players are, what they're doing, what they're looking for. But to kind of combat that side, that knowledge gap, if you like, we took the decision to join a network of finance brokers. So we're supported by, we're an authorised representative of a finance broker that's been trading for a long time, set up in sort of early 2000s. They've got lots of experience. They've got access to over 300 lenders across all of the product ranges. So it really gives us we hit the ground running with regard to having all of those suppliers and all those lenders that we can approach. And they've been brilliant in, every time I can get an inquiry and I work through it, and then I lean on them for their kind of long-standing expertise in the market, because I'll say, oh yeah, Glenn, you want to go to these, and then I can go off and do it. So yeah, so that knowledge gap, there is a knowledge gap, and I'm learning every day. Every day's a school day, as it were. But yeah, we've got the support network around us to be able to do that. So that our clients get what's best for them.
Okay. From an insurance perspective, do you ever get asked any really dumb questions? That kind of, I say dumb. I know you can't say that, but like questions that are given on repeat that you go, man, I wish there was a playbook for this. Are there any kind of particular questions that you'd maybe like to tell people now? Anyone who watch this now or in the future, these are questions that just have simple answers. Does that make sense? So
absolutely.
When I was running Amakari, the question I always got asked was like, well, how much tax will I save? And the answer would be joking, like, how long is a piece of string? Like, it depends on the business, how much your personal earnings are, all this stuff. And it's a question people always ask that it requires some finesse.
I suppose one of them is I'm regularly asked for to provide a public liability certificate. Our supplier needs to see our public liability certificate. Most people will know about an employer's liability certificate for, say, your employees, because you display that on the wall in your business premises or on your intranet. Nowadays it doesn't have to be on the wall if you can put it on an intranet that's available to all staff. But public liability certificates aren't really a thing, and the reason for that, the certificates are issued generally for statutory insurance covers, so insurance covers that are required at law, such as motor insurance, you have a certificate for. Employers' liability insurance, you have a certificate for. Public liability isn't a legal requirement. Lots of people may feel that it is. It's more of it's a contractual requirement.
It's a good idea, right?
It's a good idea. You won't get very far without it. Especially if you're working in the commercial space. As soon as you get a contract, their insurers are asking them, we need to make sure that the people that are working for you or that you're subcontracting out to have the appropriate protection in place. So they'll ask for it. And what brokers provide generally is what we call a to whom it may concern letter, which covers off employers' liability and public liability, and you can send that on to everybody. But yeah, I regularly get asked for a public liability certificate, which actually in many cases doesn't exist. There are a few insurers though that more recently I've noticed, Hiscox being one of them, they do issue now both an employer's liability certificate, a public liability certificate, and a professional indemnity one if there's a professional indemnity cover section. So they are, I don't know whether that's them kind of brokers of asking, can we just have one? I know it's not needed, but can we have it? Because it'd be easier.
That's fair enough. Maybe. And you mentioned Hiscox, a very big player in the game. Can we put a pin in them for the moment? Because I want to ask you a question more about your business. So you started in 2020, right?
Yeah.
I mean, I'm going to ask an obvious question, but how was all that?
Yeah, it's funny, really. A lot of people ask that, and I sort of think it's hard to answer because I don't have anything to compare it to. You know, it was what it was. It wasn't the plan. All of this was planned out in, end of 2019, start of 2020, with a view to kind of launch in March. And it was funny, actually. We went on our training session with the guys on the finance side, and it was like a few days away, staying in a hotel right next to the office where we were doing the training. So we didn't actually get out anywhere in between, really. It was like, go to the training for the day, go back, have your dinner in the hotel, go to sleep, and go back to training the next day. It was kind of a bit out of the loop, and it was the week before the lockdown happened. So I remember driving back. It was up in Yorkshire. I remember driving back and speaking to my wife and saying, "Yeah, we're coming back. How's it all going?" She was like, "I'm going to Tesco's to get some toilet paper before they run out." I was like, "What? What are you on about?" Like, and then obviously we all know what happened next. But yeah, in terms of from the business point of view, like I say, it's hard to not compare it to. I think it was from speaking to the network, things were obviously different prior to that. I think people's needs were different. I think some of the products on the finance side kind of got put to the wayside because of those government supported packages. The coronavirus business interruption loan, the bounce back loans. A lot of the focus with people and borrowing was going for those things. Their accountants were obviously advising them to take that money as well, because of what it was there and what it was there for. And I think for some of the other solutions that may have been there, a normal business loan or even invoice finance and things like that, are kind of were less of a focus for people. And I think we're starting to see that come back now, where the CBILS scheme has ended, the furloughs ending, and then we're starting to see now where people are having to pay back those loans. There are now potential cash flow issues there within the business, where it's then looking at those other products such as invoice finance, which is a great product for generating cash flow within your business. Basically, if you're lending to somebody, you'll know all about it, but for the viewers, if you're if you're issuing invoices to people and on trade terms, credit terms, and they're not paying you for 30 or 60 days, it is possible to use those invoices as an asset and borrow against those up until when you're paid. And there's a lot of good sort of benefits from doing things in that way. There's obviously a cost to it, but it does inject cash into your business. You issue the invoice, and before you're paid, you get usually around 85% of the invoice up front. But you can also be then outsourcing the actual credit control aspect to an invoice finance provider. So they'll chase your debt to get the money in, and then when the money's in, they send you the other 15%, less their fee.
It's funny you say that, because I know plenty of accountants that don't like factoring accounts, because that adds an extra layer of complexity when it comes to the cash flow and forecasting and all that kind of stuff. So it's like,
I can imagine,
but I get it. Certain industries, certain businesses, like you say, they've got those 60, 90-day credit terms. It's kind of necessary. So no, I completely get it. Often people who view these videos, they are people that in different levels of interest. There's some people who are very, very senior, and some people who are just starting out. And I want to maybe give a little bit of flavor for those people who are just starting out or considering a career in insurance. What would you recommend someone does to start a career in insurance, for example? Like you've got quite a long tenure.
It's a funny one, really, because with insurance, there's a bit of a joke within the insurance industry of that no one, if you ask anybody what their story is, no one really sets out to work in insurance. I haven't met anybody that set out initially to work in insurance. It's not something that's ever kind of mentioned in school, or there's a natural path that you then end up working in it. It's usually as a result of something else. My story was that I was always very interested in IT, and I went to a business college and applied for an apprenticeship working in something to do with IT. They came back and said, "Oh, we don't have anything at the moment, but we do have a customer services MVQ in an insurance brokerage." And I thought, okay, well, I was 19. I thought I'll go for that, and here I am many years later, still within the industry and enjoying it. So to people starting out in insurance, I think it's just find a good company, that whether you're going on the underwriting side, so find an insurer, or if you're going to be a broker, find a good local brokerage. Maybe I started in a smaller brokerage rather than one of the big, the big names, the big companies. which worked really well for me because you kind of know everybody there, and you get more of an insight, I think, working for a slightly smaller company into how everything works, rather than, I suppose I have worked for larger brokers as well, and I think when you're in those institutions, there's levels of hierarchy within there that, when the insurers come in, for example, to talk about what products they have and what type of customer they're looking for, those meetings are normally taken by people in a much more senior, there's an operations director, something that takes that job, and then it's their job to cascade the information down to the team. Whereas when you work in a smaller company, you're quite often involved in those meetings yourself directly. You have those opportunities to meet and make those relationships. And I think that's really important, because when you've then got that risk on a Friday afternoon that needs placing, and it's a bit, there's a couple of things about it that perhaps are a little bit less favorable, it's a relationship game, and you need to be able to pick up the phone to somebody at the insurance company who's a friend and say, look, I need to sort this. I need to solve this. I know it's not, 100%, but this is what we've got, because that's the reality, of the day to day of it. So I think, the key thing would be to find a good company to work with, where they're going to support you with doing the exams, the industry specific exams through the CII, and that are going to train you up, because there's a lot to learn, lots of different products, and every business is different, and every business has different exposures, even just within the same industry. If they're doing things slightly differently, there's different, using different types of machinery, there's different exposures there to think about. And
off the back of that, what would you say, and this is a double question, what would you say is the most challenging thing about working in insurance or brokerage, and what would you say the most rewarding thing is?
Okay. So I'd say probably the most challenging thing compared to some other job roles would be your ability to plan your day out in terms of what you're going to do each day. You should do that, obviously, but it's quite often to start a day, you've written a list of I need to do these, whatever it is, 8-10 things that I need to get through. But insurance by nature is very unpredictable in terms of, you put your client, you've got your clients on there, that they're going through their day to day. Anything can happen. Small, midterm adjustments can happen as and when. You can plan a little bit for those in terms, you have vehicle changes, and various changes, within businesses. And then you have claims as well, which can happen at any point. That's the whole point of it. You don't plan for a claim to occur, and you hope it doesn't happen. But when it does happen, that person needs you there and then, and you have to be there for them. And that can sometimes wipe out what you had planned for the rest of the day. But that's part of the game. So I think that's the challenge. Is in some other roles, I think, where it's a process perhaps, and you're following through. I need to do this report today, and then it's month end, so I do this report now, and I do, without, and you're not interacting with people as such. There's less disruption. You can plan out your whole week, and that isn't the life of an insurance person, because any curveball can come in at any point. When that person rings you up and goes, "My car's just been stolen," and you're like, right, okay, everything goes to the side, and then focus on that. But I'd say the most rewarding thing is it's in a similar vein, really. It's being able to solve those things for people, being there, being that person in their moment of crisis. You're that person that is there to try it, and that's the skill, is to be, you need to be calm and understanding when somebody's, perhaps the time they're contacting you, they're in a heightened state, they're in a position of turmoil, and that can be really rewarding when you come out the other side of that, and that person then says, thank you for that, because it's a really interesting product, really. It's an interesting sale, because you're selling something to somebody, and this is like no other product I can think of off the top of my head. You're selling something to somebody that is essentially a promise. You can't touch it, you can't feel it. I hope you never have to use it. You hope you never have to use it, but you do have to buy it because you need it. But but in the unfortunate event when you do need to use that product because you've suffered a loss, it needs to work for you. And I think in a role of being an insurance broker, that's your job, is to be. They need to trust you that on that day, should it happen, you will be there for them. And I think that's as a sale, it's a little bit different. It's intangible, isn't it? It's a little bit different to certain other industries, where you sell it, certainly where you're selling a physical product, you can take it out and go, here you go, look, this is what it is. Do you want to play around with it, see if it works for you, touch and feel it. It's different.
Yeah, so it requires a lot of trust. And
Yeah.
I would argue that, or not argue, posit, there we go, that actually some of the stereotypes associated with insurance and insurance brokers, the negative stereotypes aren't actually true. You have to be quite personable. You've got to be quite outgoing.
Yeah, I think so. I mean, look, there's lots of negative stereotypes around insurance, and I'm sure in some cases maybe there's some truth in those, but there's various different factors to consider, and there's different types of insurance and different. You've got personal insurances, and you've got business, and there is good and bad out there. And again, the broker is there to guide you really through those things, because it's not just about the product, but it's the insurer as well. What's their security like? Are they going to be there in 6 months' time? You buy your policy today, but are they still going to be trading? And insurers have financial strengths and ratings behind them, and that's another important thing to consider and to be sharing with your customer, saying, look, I recommend it. I've got this one and this one. They look the same, but actually, this insurer actually is a lot stronger.
How are they rated? Sorry, like, is it like a star system or like what?
Yeah, there's a couple of different institutions, recognised institutions that put the ratings on them. So I think there's one's called Moody's, another's called Standard and Poor, and you can look those up online, or the viewers can. But they essentially give a rating that's either like an A rating, A or A plus, or they have different criteria. And then you have right at the bottom unrated insurers, which have no rating, which should really be avoided in all cases where possible. But there are certain industries where there just isn't the capacity within the insurance market to write to provide a rated solution for those. There's very few, but it's things like rubber recycling, for example, is one where it's very difficult to find a rated insurer because it's just such a high risk
industry, or high risk.
Yeah, but it's just the risk of if you've got, like, say, a massive factory where they're recycling tires, car tires and things. Rubber is highly flammable, and if there needs to be all sorts of checks and controls there to try and prevent that fire from happening, because once it goes up, and it goes off. It's
earlier in the conversation, you mentioned a very big insurance provider, and I know they've been in the news recently. I mean, would you care to share your perspective on that, or is that kind of let's not touch that area?
I can a little bit. It's so I mean, you're kind of alluding to Hiscox being in the market for they were one of the main ones sort of dragged over the papers to do with the business interruption situation following the pandemic and the COVID pandemic, and it's a really unprecedented situation, not just in insurance, in everybody's lives, and everyone can agree. No one could have foreseen this. I think. What we've experienced over the last sort of 12, 18 months. But from an insurance point of view, early on, a lot of people obviously suffering huge disruption to their businesses and to their lives, and then looking at their insurance policies and saying, well, what am I protected for with regard to COVID? And it's always difficult. Like, from within the industry, I can see there's different products, there's different insurers, and they have different wordings, and there's the intricacies of it where you break down to it all comes down really to how they deal with disease and illness under the policies. And some of those policies are written on what's called a specified basis, so where they have specified illnesses that they cover, and they'll be all listed, and they're all recognised, known diseases that they will cover, and anything that isn't specified isn't covered. On a specified policy, COVID cannot be covered because it didn't exist. So therefore, it couldn't have been specified because it didn't exist prior to this pandemic, that specific strain of coronavirus, COVID-19. Some policies are written on an unspecified illness basis, and that's where it gets a little bit more tricky, because there's an argument to say, well, if it's unspecified, then it's not. There's potentially coverage there. Now, there's other conditions, and it's quite complicated when you break it down. There's other conditions that need to happen in order for a claim to be valid. But that then became, I suppose, what's difficult then is it's breaking it down into, well, who's covered and who isn't, and is there like a blanket approach that can be applied, and was the policy that you bought and the pricing that was attached to that policy intended to cover a global pandemic? And I think some insurers would argue, and I'd probably be inclined to agree that there's certain small package policies for a small office or something like that. You pay a couple of £100 for that is providing you with property cover, liability cover, some legal expenses cover, business interruption. To an extent, is that policy at that level designed to indemnify you for the huge cost that you incurred as a result of a global pandemic? I'd have to say probably not. And then you've got to argue, well, actually, what if
controversial?
It is, but I suppose you've got to ask yourself the question then, well, if the pricing did include something like that, what would it be? Maybe that £200 policy would be £1,000, and would people pay that if they knew up front? But it's difficult because obviously they won't ask that question up front because we didn't know what was coming. So I think it's a very difficult area, and I think it's we can say there's certainly been insurers there that have taken, even if their wording perhaps should have indemnified policyholders, they've kind of sat back and said, well, let's see how all of this all these court cases and everything in the mainstream media and the high profile stuff plays out before we make our decision. It's an interesting and unprecedented time, and in all of these situations, I suppose, as the politicians always say, lessons will be learned. So that's I'm sure that's what's happening in insurance companies as well. They're all working out how we do it forward.
Kind of follow-up question from that. So hopefully this isn't too long-winded, but as you know, I'm a bit of a kind of a tech geek and wizard. I like pragmatism, and I don't mean to offend you with this question, but why would I pick a broker over a comparison website? Because I can only assume that there's more and more kind of machine learning and AI. And I use the term AI very loosely because, but machine learning going into the whole insurance process that is streamlining it. And is it taking out the human element? Are you finding it difficult to compete with that, or do you think human actually still needs to be there?
There's a few questions in there, and I've read. No, it's fine. I mean, I've read articles over the years that sort of allude to the fact, and it's accountants aren't safe either, are they? I mean, with the AI and automation, I read something a few years ago that said, in 10, 20 years, you won't have accountants, insurance brokers, and solicitors. It will all just be one big computer that just works.
I'm biased. I disagree, but go for it.
Yeah, no, I do as well for my own but So to go back to what you're asking, I suppose first of all, in the current market, it's not quite as simple as that, because I suppose the comparison websites, in terms of buying insurance for commercial businesses, at a certain level, it's not really possible to go direct or to go through. They have comparison websites up to a certain size, but once you get to a certain size of business, you do actually you wouldn't
be roughly for the boys and girls at home.
Sorry,
what kind of size would that be roughly before you can?
It varies really, because I mean, some insurers will have online products that you can buy from their website directly that I'm sure will go up to several thousands of pounds. I suppose it's more that once you've got something that's a little bit on you, because it's all what fits within their box. So if you can tick every box for their product that they don't have to look at or touch, then you're fine with them. If you have anything outside of that, you do anything slightly unusual that doesn't quite fit, then you're probably going to need a kind of a proper underwritten solution where you've got a broker gets the information presented to insurer and they come up with the quote. So you can self-serve up to a point with business insurance, but it generally is at the lower level, and that self-serving from an insurer is not an advised sale. You are going on there as a business and you're buying your insurance, and you're not being told what this is better than this, or you should think about this, or what the risks are. You've only got half of the thing there. I think in the personal line space and the small business space, though, yes, insurance has got to a point where people are very used to buying things online. That's how we all purchase most things, and they make the process very easy for people to go through and do your motor insurance quotes online, and it's cost effective for you to do that. And yes, I think 20 years ago, people were willing to pay for that advice, and nowadays, not so much. It's kind of been commoditized and crunched, and the AI, knows what's what. But I think the danger, in my view, as an insurance professional, is that I think a lot of people go onto these sites and buy and innocently buying what they want, but they're able to select different options and get different prices. And I heard an old adage that people will put through five insurance quotes. The first one's the truth, and the fifth one is the one that they buy. And and that can, I think, have a, has a bit of a, that speaks for itself really in terms of people's buying experience. That I think if you were sat with a broker advising you, people would be perhaps, I'm not honest, is perhaps the wrong word, but they'd just be more, if you're looking in the whites of someone's eyes and they're quoting, whereas I think people, when you sat in front of a computer, we feel a little bit anonymous, the old keyboard warrior thing, isn't it? It's argument. But
I also think, like, sorry to interrupt, but I think there's also a space for expertise. Like, you are a qualified broker, you know the industry, and actually having that industry knowledge and insight of the products. A machine doesn't necessarily do that. Well, they can't do that at this stage, right? So there's always that kind of human component of going, actually, I figured out this, and this needs to be considered. Whereas if you're going through a tick box, it doesn't quite do the same.
No, absolutely agree. Yeah. And I mean, I would say that, but I do absolutely. Yeah, I absolutely agree. I think I'd be sad to see the personal element lost from it as well, because I mean, the majority of my clients, it's not just an over the phone even, or where it's safe to do so, and we're not in a global pandemic. And generally, I'd go out and visit those clients and see their premises and see their processes, meet the people, understand their business, and understand what it is that's important. Because ultimately, what you're doing is you're protecting somebody's livelihood, isn't it? It's their business. And the job of an insurance broker is to go in, and collect all the information about what your sums insured and what your wage roll and your turnover, but ultimately to work out how do they make their money, and all businesses are different, and then protecting that so that in the event that something happens, it's not so disruptive to their business that they no longer have a business at the end of it, And I find it hard to see a world where, for the larger customers or the SMEs to sort of corporate clients, how that service could be provided by going onto a comparison website and tapping in your information. I think on the business side, people are willing to pay for they kind of, it just is the way that people pay for the pay.
It kind of has to be that way.
Kind of has to be that way, and the insurers as well will only trade through a broker at that level. They need the broker to be out there be their eyes and ears, collect the information and present it to them. And long may that continue.
And I have to ask as well, because we're going to wrap this up. I guess I'll just be direct. What makes Glad? I mean, apart from having the finance side of things on it, that's really cool, in my opinion. But what makes Glad Insurance different in the market? Like, what are you guys doing differently?
Yeah, so what we're doing differently is we are a fee-only brokerage, transparent fee-only insurance brokerage, which is slightly different. So most insurance brokers, in my experience, have been they charge commission within their premiums. So you got quoted a premium that includes the broker's commission and the insurance premium itself, and then you pay your insurance premium tax on top of that at 12%. What we're doing is we've structured it in a slightly different way with this transparent fee-based model, which saves money on the insurance cost, but also the amount of insurance premium tax that our customers will pay, because we take, instead of taking commission, which insurance premium tax is applied to, we take a fee which has no insurance premium tax applied to it. So you know exactly how much your insurers take in, how much we take for our services, and then how much is going across to the taxman. And I think that not only helps customers to save money, but it helps them to see how that premium is divided up. And that can be very useful following a loss, because it's easy to see, if you've been with an insurer for 3 years and they've been collecting an amount of money each year, and then you have a claim that takes up a portion of that, and then they increase your premium by X amount. It's useful to be able to see, well, okay, let's look at it from their perspective. They've collected, £10,000 over 2 years, and you've had a loss. But actually, if within that £10,000 that they're collecting, a quarter of that is a broker's commission, then actually it's a slightly different position that you're looking at for that insurer, isn't it, as a customer? So it's really to just keep it simple, transparent, and save people on their insurance cost and on the insurance tax. Everybody likes paying less tax, I'm sure. You can attest to that as an accountant.
Yeah. Well, unnecessary tax. That's
unnecessary tax. Yeah. I have to stress there. I've checked it out. It's not classed as tax avoidance or tax evasion or whatever they are.
Avoidance is okay. Evasion not so good.
That's right. Yeah.
But yeah, no, thank you for joining me online. Like I say to everyone,
No,
like,
thanks.
oh, Dale, you're really cool doing this. It's the people that come on here and give up their time and chat about their industries with enthusiasm and passion, like you have just done, that actually make this interesting. I'm just a guy who asks dumb questions, so I appreciate your time, man.
Not at all. No, I've really enjoyed it. It's been great. Like I said, I've been following the lives and following your posts, and then I thought, well, I'd like to be on here too. So yeah.
Oh, and just sort of wrapping up, we've got a comment from Joy Langley. Joy, thank you for joining us. I mean, I think it's nice to give people a shout out if you're watching. I appreciate it. Interesting fact about LinkedIn Lives, they don't tell me who's watching. I kid you not. So I'm assuming no one is watching, but obviously are. So thank you for letting us know you're watching, Joy. I appreciate it, genuinely.
Yeah.
And I'll have a word. Well, I say I have a word with LinkedIn. I'm not that important, but I'd like to ask them why I can't see if people are watching or not, because that would be really helpful.
That would be useful, wouldn't it? Yeah.
It would be. Sorry, but that's a matter for another time. Glenn, thank you very much. I appreciate it.
Thanks, Dale. That was great.